Hey, Milk Road fam. I'm Kyle Reidhead, co-owner of Milk Road and head of research at Milk Road Pro. And we're sending you a new piece of content today, something that I just want to do just to help out. I know markets right now are a little bit crazy, a little bit volatile, and there's a lot of fear, uncertainty, doubt in the markets. And so I wanted to just do something different and get a message out to our entire community, whether you listen on the podcast or watch on YouTube or you read the newsletter, or you're in our pro Discord, wherever you are, I wanted to get this message out to everyone. I'm going to quickly show a few charts that are just going to help everyone navigate the markets because I think there's a lot of confusion right now. There is a lot of uncertainty, which is warranted, right? We've had a crazy few weeks. Markets have been down only for the last, let's call it 60 days or so. We've had these frauds with Libra and I guess Trump and Melania tokens. We've had altcoins get completely wiped out. And so a lot of people have lost some money. And I know from what I'm seeing on our comments on YouTube, in our Discord, on Twitter, from replies in the newsletter, people are worried, people are scared, people are exhausted and getting upset. And this is what crypto does to you, right? Crypto is very, very, very volatile and it plays with your brain. And if you can't hold that together, we often make really stupid investment decisions. And I want to make sure that no one is making those stupid investment decisions today. And so I just want to do this quick flash update and just share to you guys what our team is currently looking at. We have the benefit of having a massive team, well, not a massive team, but a team of around 10 to 15 people who meet on a daily basis sometimes to just talk about markets. What are we seeing? What's really going on? Both from a macro business cycle perspective and then specifically within crypto. And so it really helps us navigate the markets. And I know not everyone gets that opportunity. And so while we try to get content out to you guys daily and interview experts, et cetera, I just figured, you know what, why don't we just tell you exactly from myself on what we're thinking and what's going on in markets. And so I'm just going to share screen and help us kind of get all on the same page. Wherever you're from, wherever you're watching, listening, reading, I want to get us all on the same page here. And so to start things off, I understand why everyone is so afraid right now, right? Fear is sitting at about, in the 40s for the fear and greed index. And so the market is obviously a little bit scared. And it makes sense. I mean, Solana is down about 45% in the last month, let's call it, not even. And so it's been a bit of a tough go for a lot of people in the last few weeks. But really, Solana's been in a pullback since December, and so has Bitcoin, and so has ETH, right? Everything has sort of been in a tough go over the last little bit here. And so it makes sense that people are getting scared. But I think what people need to realize is the moments when people are scared is the best time to be greedy, the best time to actually take on some risk. Now, that is true. And then the opposite is true, right? When people are greedy, they're getting too excited. That's the time to actually get out of markets and lower your risk. But that is only true when we are not at the top of the cycle. And I think a lot of people right now are saying, okay, we've hit the top of the cycle. It's down only from here, right? And this is starting to pick up a narrative on Twitter, seeing more and more people talk about it. And to me, I think that's just complete nonsense. And I want to make sure that everyone understands this, right? You do want to be greedy when others are fearful, so long as the trend, and I mean the trend in the business cycle, the trend in the liquidity cycle, the trend in the overall markets is more bullish and is on the way up, right? Now, how do you know that? For those of you that listen to Milk Road, and we generally talk about this across all of our content, we really follow the thesis around the business cycle and the liquidity cycle. I'll share this picture here. If you haven't seen this, this really is your key to understanding markets, right? It's not about the Bitcoin halving or these 4-year cycles. It's all about liquidity and about the business cycle. And if liquidity is increasing, then crypto markets are going to increase. It's just how this stuff works. It's not even just crypto. It's all assets, pretty much. Gold, stocks, real estate, etc. As long as global liquidity is increasing. Now, the problem is how do we know if global liquidity is going to keep increasing, right? We've had a big pullback. We haven't had a lot of liquidity. The US is not printing money. The rates are still high. The dollar is still high. Other countries around the world are not printing money. And that's the big fear here in the macro side of things. Obviously, the crypto side of things is a lot of fraud, a lot of dumb stuff going on in this space. And of course, number go down for the last 60 days. So that kind of warrants the fear that we're currently having. But what I'm saying is actually things look really, really good if you really understand what is going on in markets currently. Now, before I get into some of the things going on in the business cycle and the liquidity cycle, I just want to share this real quick so you guys kind of understand where we're coming from. But this is a chart that's just showing the total market cap of crypto compared with the calls that we've made based on business cycle, liquidity cycle, and then sentiment. We've done a really good job this year, and this isn't to toot our own horn. It's just more to say that this stuff can really work if you stop all the noise, stop seeing what you see on crypto Twitter, stop with the short termism, and you actually just look at the real data. When you see what's going on in the business cycle, liquidity cycle, and sentiment, you can start to make a lot better decisions. So in 2023, in January, because the business cycle had bottomed, the liquidity cycle had bottomed, we said this is the time to start allocating, and markets went up. We did it again in October 2023. We said, look, everything points to a big rise in liquidity, a bottoming in the business cycle again, and it's time for markets to go up. And it did. And it went really, really well. A lot of people, we got in at Solana at around 20 bucks, 25 bucks. Bitcoin well below 30, 20,000. ETH was, I forget at the time, around in the thousands anyway. So everyone did quite well. But then people got too excited and we said, you know what? I think a pullback's coming. We put out our pro report and almost to the day we nailed it. And we had 9 months of chop after that. Okay. Now we put out another one end of July saying we think markets are about to have their next move up. I'll show you guys why this all happened in a second, by the way, from a chart. And we were a little bit early. We were about 10 days too early in this one. The yen carry trade unwind happened right after we had said markets are about to turn. And so that nuked things. But that did end up being the bottom last year in 2024. And so from August on, it was kind of up only until November. Again, we said, guys, it's getting too much. We think a pullback's coming. Now, I don't think that we call, like, we're perfect here. We're not going to call things on the daily ever. We call things more over time. And so, like, don't expect me to say, hey, today things go up moving forward. That's not how it works. And this is a weekly chart. So this isn't to the day either that I'm showing on here. But what I wanted to show here is that if you pay attention to the right data, you really can understand a little bit what's happening to markets. Again, it's not perfect, but the fact that people are calling that the market is nuked and we're done and the top is here makes zero sense. Why? Well, it's all because the ISM. This is the chart that shows the business cycle. The ISM is basically how well is the US economy doing? And the better the US economy is doing, meaning is it expanding, then what that means is there's more consumers out there to buy things, which means companies do better, which means they take out more loans and they buy more stuff, which means more people are investing. There's more cash around the system. There's more liquidity being made. And that is a bull market. That is what you want to see for a bull market. If you look at this ISM index here, again, this is just the business cycle. You guys might have seen this. We've shown the business cycle in this chart before from Milk Road. We do it in terms of seasons. And generally, when the ISM hits above 50, you're in summer month of macro, not month, sorry, but the summer season. And it usually goes on for months. This is a risk on time. This is when you want to be in risk assets. Okay. And so if we look at the ISM right now, it's just past 50. Okay. It's been years since it's been past 50. So this is a big moment for markets. And again, what this means is that when the US economy is expanding or growing, earnings do better for companies, which means assets tend to go up, including crypto, because also more liquidity is made during that time. When businesses are doing well, they take out more loans, which means banks create new money, which means new liquidity is entered into the system, which means all assets begin to rise because we debase currencies. That's the whole idea of, not this one, this one. As more liquidity is made, assets must go up because we're debasing currencies. Now, the big problem right now is that we haven't had liquidity in the US, and that's the big fear in markets. But this is a telltale sign that the cycle is not over. And I don't want to say it's just beginning, because it's not, because this ISM is going to move very quickly. Okay. Look at here. It moved very quickly from 2020, 2021. Okay. When it moved very quickly upwards, that's also the bull market we had last cycle, 2020, 2021. Again, 2016, 2017, it moved up very quickly past 50. Another bull market. 2013, 2014, that was the other bull market, right? In crypto and also in tech stocks, not just in crypto. And then let's look at when the ISM goes down in 2016 or 2015, bad time for markets. That was the bear market. 2018, that was the bear market. 2022, that was the bear market. Look, this isn't a perfect indicator, but this tells you the business cycle, and most assets work alongside this. And so it's crazy to say that we've topped when the business cycle is just finally passing 50. I think this is going to shoot up much higher over the coming months, and that's really going to lead the next uptrend in crypto markets. In case you don't understand it, just look at this chart here. Here is every time the ISM has peaked has gone above 50, and then when it's peaked. Okay. Each line is when it's gone above 50 and then when it's peaked. Look at Bitcoin's price action. It's just so obvious that whenever the business cycle goes up, more money comes into risk assets. And in fact, and I don't have the chart here to show you it, I'll have it in the report that I'm going to send out on Saturday. I have all this around liquidity and business cycle more detailed, written in a long report that's going to go out to the newsletter on Saturday. So for those of you that are subscribed to the newsletter, you'll get this, but more detail. But when the ISM passed 50, it's also the time when altcoin season, or banana zone, as people have said it on crypto Twitter, it's when that starts to play out, when Bitcoin dominance goes down. Bitcoin still goes up in price, but other assets tend to do better farther down the risk curve. And I know there's this big narrative right now that we're not going to get altcoin season and we're all cooked because assets did so bad, altcoins did so bad over the last few weeks. Again, when people are fear, when there's a lot of uncertainty, when people are saying this is never going to happen, that's generally a time where it's about to happen. And I think that's what's happening here, again, as the ISM starts to cross over. Now, one of the other big things going on in the macro world is that we're not getting liquidity in most of the world. We're not printing a lot of money, right? That's why we've had this pullback over the last little bit here. And much of this has to do with the dollar. So when Trump won the election, the dollar skyrocketed, went really high, abnormally high. And then he started to do, once he was inaugurated, he started to basically make up these tariffs. He's using them as negotiation tools. But again, it's kind of faked out the market to think that if tariffs happen, the dollar is going to go up, et cetera. And so people have been strong in out of risk assets and more in the dollar, in the Dixie. And this is exactly what happened when Trump won the election back in 2016, right? And so if you look here, the blue line is what happened with the dollar when Trump won back in his last time he took office. And then what happened in the year that he took over office. It went way down from 104 down to like low 90s. Okay. And the same trend is playing out here on the red, which is now, right? It skyrocketed up to about 112, I think we hit. And now we're already down to around 106. And I think we head much lower, probably around the high mid 90s. The reason that this is important is that when the dollar is high, other countries around the world can't print money. And right now, China really needs to print money. China's economy is very slow. They have no growth and it's basically at a halt. And they need to stimulate that economy, but they can't do it when the dollar is high. What they need, because what will happen is their currency will kind of spiral out of control. They need this dollar to go lower. And when that goes lower, China will proceed to start printing money. Here's the chart of China and their liquidity over the last however many years. The whole reason we had a bull market in 2017 was China. The US didn't print money. The Fed didn't print any money. Rates were actually raising during 2017. So we don't need low rates. We don't need quantitative easing from the US for a bull market. We just need someone to print a bunch of money. And China is the reason why we've had a bull market the last 2 years. It's not really been the US, okay? Although that's coming in the US with the ISM and more liquidity will come from that. But if you look at when China has printed money over the last 2 years, early 2023, that's when we had the big price action in crypto. Late 2023, that was the biggest move we had, right? And then early in 2024. Then we had a huge, in middle of 2024, we had this like 9 months of chop. Well, China was not giving any more liquidity at that point. In fact, it was lowering liquidity. And then again, end of 2024, we think it was Trump that made all this move of crypto prices, but it was global liquidity was going up, right? China was printing a bunch of money. Why are we in a pullback to start 2025? China hasn't printed any money and they haven't been able to because of the dollar. Well, I think that the dollar is about to go down. China's finally going to start printing money, and that is going to cause the next leg up in markets. If you want to learn about liquidity, I highly recommend you go and check out a video that Jay did with Andreas Steno on the Milk Road Show. I'll put it in a link in the notes, but basically he talks all about liquidity. Definitely check out that video. It's really, really good to help you understand that. But ultimately, what this is doing, the ISM going above 50 and continuing to rocket from here, China finally being able to produce more liquidity, it's going to get us farther into this chart that many of you guys have seen, which is the banana zone, right? Which is this crazy year or 2 years we have in crypto every cycle where things just go through the roof. We're already in it. Okay, so don't get confused. We're already in it. We entered it in November-ish of last year. We're just in a normal correction right now. This happens all the time, every cycle, right? We're going to get more of those corrections. So we might lift off in a month or a few weeks or whatever it's going to be, and then we'll get another correction. Okay, this is just normal. Look at Bitcoin. Okay, Just look at what it's done. It's kind of done this stepwise. I should have drawn some lines here too, but it continues to do this. It skyrockets up, right? In a matter of 2 months or 3 months, we go and we double, and then it does nothing for 9 months. And this is when people trip out, right? We get impatient, we get exhausted because we start diddling around in all these stupid meme coins and a bunch of useless tokens that go from, whatever price down 90%, and we go, shit, I shouldn't be in crypto. This stuff makes no sense. But all you had to do was nothing during the 9 months that Bitcoin was dropping, maybe buy the bottoms if you could, right? And then just wait, and boom, we went up again, right? And then now we're in the same period right now. We're just in a consolidation period. We're waiting for liquidity or the ISM to pick up. We're waiting for some more answers in macro, although I think we already understand them and know where it's going. And so this might chop for a few more weeks, maybe even a few more months. I don't know. I don't pretend to be able to predict this all perfectly. But there's no reason to think that crypto's over and we're all going to go to zero again, right? And there's no reason to leave this industry and to sell into stables. We're just consolidating. Crypto consolidates in very volatile patterns, right? We go up 10, 20%, we go down 10, 20%. The same things happen in all markets. It's just they usually move only a few percent. So you just got to be able to stomach this stuff and understand, are we really at the end of the cycle? And if the ISM and the liquidity cycle says no, then there's really nothing to worry about. Now, again, you got to be holding the major assets, the good assets. If you're holding a bunch of dog shit tokens, then you're going to get wrecked regardless of where this stuff goes. So, of course. But again, if you're holding good assets, you're in spot, not leveraged, you zoom out, right? You just zoom out and look at where things are. If you actually zoomed out here, there is really nothing going on. What pullback, right? This is nothing, right? And when you really zoom out and look at things, but we struggle to do that. We always look at the in the moments. We look at the daily charts or the hourly charts, and that's what really gets everyone screwed up. If we zoom out even further and just think for a second, to me, it's wild that anyone is afraid that markets might be cooked right now in crypto. What is happening? One, we're not at the end of the business cycle. Okay, that's your obvious one. Well, not obvious, but if you understand that. But two, we've got new regulation coming in across the US. We've got ETFs coming for a bunch more assets. We've got sovereign wealth funds like Abu Dhabi buying Bitcoin. We've got a bunch of companies putting Bitcoin on their balance sheets. You've got companies like Robinhood integrating into crypto and using a bunch of crypto in their business. They're using stablecoins on weekends to settle. You got companies all over the world starting to use stablecoins. We're getting like $5 billion worth of stables coming on chain every week right now for the last like 2 months. You got Coinbase, which is integrating into DeFi and building on chain. All these banks launching L2s and integrating into crypto. There is literally not a better time for crypto. And somehow crypto Twitter has convinced themselves to be afraid and think that it's all over. And the reason that's happening is because there are a bunch of people that buy these stupid Trump tokens and Malay tokens like Libra. If you're in that stuff, yes, you're going to get cooked, and it is all over. Meme coins are not over, but that stuff makes no sense. But if you just hold these better assets, then there's no reason to be afraid here. And in fact, when everyone else is fearful and the markets look cooked, these are the times that you want to actually be buying and adding to your assets or going more risk on, moving something down the risk curve into something a little more risky. I'm not saying go all in on any altcoin ever. You should never do that. But these are not the times to be more fearful. They are the times to do the exact opposite. Okay. And that is a key thing you got to start to try to understand in your head is if the trend is still up, then you've got to do the opposite of what everyone else is doing. And you've got to get off Twitter or follow the right people on Twitter so that you're not falling into this bear trap like everyone's doing. Okay. Look, I hope that was helpful. If you guys like this stuff, I'm happy to do more of these to you guys. Let me know in the comments below. Hit a like, give a comment. Just let me know if you enjoyed this. I'm happy to do these more frequently for everyone. My goal here is just to help everyone at Milk Road in our community to do well, right? To succeed in their investments, to make more money, and to build a financial freedom. That's really the goal here from everyone. And I want to make sure that happens. And I know these markets are tough. A lot of you guys are new and haven't done this before, haven't been in the cycles, you haven't seen this before. There's a lot of people out there that spread FUD, and so it's hard. But again, just try to turn down the noise, separate the noise from the signal, zoom out, hold the major assets, and you're going to do really, really well, right? We are in an amazing time right now. It's an amazing opportunity. So just keep learning, keep building your conviction. I got a long report coming out on Saturday. Again, it'll be in your inbox 10 a.m. on Saturday as usual. So make sure you read that. It'll really help you guys kind of navigate what's going on in the macro world right now in the grand scheme of things. And then, yeah, we'll continue to create content that just helps kind of show what's really happening in this space, right? And so just keep tuning into the podcast, keep reading the newsletter, join into our communities wherever you can, and feel free to have chats. We're here to help you guys. We're here to just continue to push this industry forward and help you all become better investors. So thanks again for consuming our content, for being part of the Milk Road community and being on this journey together. We're all learning. We're all kind of growing and adopting as we go here, as crypto gets adopted. And so it's exciting times. And I thank you guys all for being part of this, and hope you guys enjoyed this. Take care.
As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.